the next 12 months, there is no bad news in multifamily. Every kind of news you're going to hear is going to be good news. There's
Mm-hmm.
no, what I'm saying is there's no foreclosures in multifamily. Cap rates will drop in all of the top 50 markets across the US. They will even drop in San Francisco and San Jose, which are the markets that have been hit very, very hard by the pandemic in terms of rent drops. I still
Mm-hmm.
believe that they will see cap rate compression because the interest rates are so low at this point in time that once a recovery starts, these prices do not make sense from the perspective of those interest rates, right?
Mm-hmm. Mm-hmm.
So there's no doubt in my mind that if you have a short-term strategy with a multifamily, you're going to do really, really well. So 12 months from today, I expect to see price per door across the board about between $10,000 and $15,000 higher. Well, I'd say $10,000 higher. I think price per door in the United States today is about 176 a door, and that's class A, B, and C.
Mm-hmm.
So I expect that to go up very substantially. 6, 7, 8% is likely to happen. Cap rates in the US are today at 5.10. I expect them to compress to 4.9 12 months from now. Um, I do expect interest rates to slowly tick up. A lot of people are like, interest rates can't go up because the Fed is said they won't raise rates.
Mm-hmm.
Yeah, I get that. But the Fed doesn't set interest rates. The Fed sets what is known as the federal funds rate. And the federal funds rate is just an indicator of interest rates. If we start seeing inflation in the marketplace, which is going to happen because we just created $1.9 trillion out of thin air,
Mm-hmm.
money that we didn't have. We
Yeah.
created it and we started sending it out to the states who are going to spend it. The US economy has never spent 2 trillion extra dollars. So if
About
you look at the total, it's
12
an
months.
absurdly large amount of money plus an absurdly large amount of liquidity. When you drop interest rates to zero and you flood the market with liquidity, there's also liquidity benefits. So
Mm-hmm.
the US is going to experience a historically large growth over the next 12 months. You're never going to have a year like the next 12 months because the pandemic will be over in 30 days. We're recording this on March 11th. By April 11th, the pandemic will be over in the United States. Doesn't mean people won't die. Doesn't mean we won't need face masks or you won't need to take vaccines. But its
Mm-hmm.
economic impact will be gone by
Hmm.
mid-April. All states in the US, including the Western states, including the liberal states, will open. So the US, and I'm also going to make the prediction that by mid-May, the United States will ship 100 million doses of the vaccine. They will gift it to some other lucky country because we bought a billion of these things. Only about 200 million people want them.
Mm-hmm.
Even if we keep 150 million in stock, I don't know why we would keep them. I mean, with a pandemic that's worldwide, what do we do with the other 650 million? Right? I mean, it doesn't make sense to me. You can't really store these things for years and years and years.
No.
So I think we're gonna in May, Biden's gonna be gifting some lucky country 50 or 100 million doses. But our pandemic will be over. We're gonna see a massive boom in the next 12 months. And again, practically nothing will go wrong. And this is coming from me. I'm the perma bear. I'm always talking about the bad stuff in the economy. It's just
Mm-hmm.
we are in this weird window of time where for 12 months you practically can't put a foot wrong. Now after that, lots of things will go wrong. So the but is not as bad as you might think it is because so what happens with interest rates cut is when you cut interest rates so much, you're taking a lot of future growth and you're dragging it to the present,
Mm-hmm.
right? And that's like an arrow that's left it's gone, right?
Yeah.
You can't undo it simply because the pandemic didn't turn out to be as bad as you thought it was,
Right.
right? You can't undo that. So what we've really done is we've pulled multiple years of growth and we're going to have 2 really strong years. The next 12 months, starting from April 2021 to March 2022 are going to be absolutely phenomenal, right? And then
Mm-hmm.
the 12 months after that are going to be pretty good. But that 12 months has both ups and downs. You are going to see significant interest rate increases in that second, group. So you're not
Mm-hmm.
going to be sure on, do I lock in my loans? Do I stay floating? You're also between now and the next 12 months, you're going to see a very significant increase in price per door. So then you're like,
Right.
do I really want to buy at $132,000 a door for the one that he was talking about at 120? Is that worth
Mm-hmm.
it, right? To buy that at 132 or 140 a door?
Right.
And so it's going to be hard to make that decision a year from today. But today is an easy decision to make because you definitely are going to ride 1 year of growth. right? So oddly enough, despite my criticism, today it makes sense to buy that apartment at 120 a door because you've got
Right.
a very high chance that it's going to go up another 12 or $13,000 a door, even if you do nothing with it.